Hey, welcome to a new segment. We'll see if it sticks. I think we'll call it the Friday Drive, where I'm going to drive. There's actually a purpose to this drive, but maybe in the future I'll just drive around and talk whatever's on my mind. But I wanted to talk about this whole economy thing and this whole, this is not political. This is just based in economics and kind of how the world works from the economy standpoint. But let me just get it out of the way right now. The economy is not strong. The economy is not strong at all. Now, I get it. That could maybe rub some of you the wrong way, but here is why the economy is not strong and why I say it's not strong. Just 2 days ago, I guess, so if this, hey buddy, we're gonna miss this because this guy, Nate and I discovered this arrow I was sitting at, it's like 2 seconds long, and this van up here was just sitting there not moving. But anyways, so this may be a failure point of the Friday Drive if I distract myself like that. But so the economy's not strong. Just a couple days ago, the Fed announced, and I'll put up a screenshot so you can see a headline, but the Federal Reserve cut rates again. So let's just start at the basics here, at the core. As of right now, again, this video, the market is essentially at highs. In fact, today, I think it was actually going to new highs. But regardless, stock market going to new highs. You would think, well, yeah, the economy is strong. The stock market is at new highs. Correct, kind of, but well, why is the stock market at new highs? You know, what is kind of keeping it up there? So let's take a step back. Why would you cut interest rates? That's really the idea behind all this. So ask yourself the question, what is an interest rate attached to? Well, an interest rate is attached to your debt, right? If the Fed lowers down the interest rates, that means your car payment, a house payment, credit card payments, all that sort of stuff for companies. Anything associated with debt, the debt becomes cheaper, meaning it makes your life easier to pay. So why would they do that though? Well, if they want your debt easier to pay, what is that going to make you think? Or is it going to make you think, well, geez, you know, the debt just got easier to, wow, you can do a payment for that amount? It's going to make you want to go what? Spend more money, right? So how does the economy grow? Well, people spend more money. So when you stop and think about it, as of right now, if the stock market is at highs, which it is, then why are we still needing to cut those rates? Well, because the only reason it's that high is because everybody is just getting loaded up with more and more and more debt. More and more and more debt because it's cheap. But eventually, if you can't lower that anymore, any further, then there's no place for anybody to go. And that's when the big problem, that's kind of when the big bell rings about the whole debt thing. Now look at it like this. Let's say if the economy really was strong, and the Federal Reserve, the Fed, started to increase rates, meaning your debt as a consumer actually went higher, meaning, oh wow, that's actually going to cost more. But let's say this, let's say you're at your job and you get, just to keep the numbers easy, let's say you got a $100 raise at your job, but then all of a sudden your debt increased by, let's just call it $25. Now, is that kind of, does anybody want to see their cost of debt rise? No, nobody wants to have an extra $25 cost, But what is also the part here? Well, you also got a $100 raise at work because wages and all that were going up. So sure that your debt cost went up because the interest rate, because the Fed raised interest rates, but you don't really care because you made $100. You're making $100 more at work. So that is why if the economy is truly strong, well, then you should be able to raise interest rates. Let me say that again. If the economy is truly strong, you should be able to raise interest rates because people's salaries are growing, their wages are going up, companies are feeling confident. All this sort of stuff is going, so sure, they're going to be able to pay people more. Companies are going to have that much more profits. And because of that, well, yeah, our debt cost is going up a little bit more, but our profits, our revenue has gone up that much more, so they don't really care. But the exact opposite is happening right now. Stock market is at all-time highs, yet they need to raise, or they need to lower rates. They need to make debt cheaper for people. So hopefully you see the disconnect there. And that is why I just kind of have to shake my head and all this stuff about, oh, the economy is so great. The economy is so great. No, if it was great, the Fed would be raising rates right now. The Fed would be making debt for people more expensive. But again, more expensive, that sounds bad, but if it's a strong economy, then it doesn't matter because all those people are just making more money in the first place. So that is what I wanted to get out of the way and just kind of talk about because it kind of drives me nuts. And this is totally experimental. If this was a total failure, that's fine. Leave it in the comments down below. But the Friday Drive, me just kind of giving my thoughts on something, perhaps you disagree with me, but you know, at the core, that's how it all works. Is the Fed, the interest rates are just attached to, do we want debt to cost people more, cost people less? And you would think that if economy is strong, you would be able to raise the cost of that debt because, well, the economy is strong and everybody's making more money, so everybody doesn't mind spending a little bit more to pay off the debt or to just to, you know, keep their debt under control. But the exact opposite is happening. So like I said, let me know down below if you enjoyed this, and if not, that's okay. You got to experiment, you got to fail. Hopefully I'll be able to get over up here. But anyways, leave those thoughts down below. Maybe you totally disagree. But yeah, right now, as of this recording, the economy is not as strong as what some people would like you to think. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.